So next we will start with the banking system of India, banking system in India. So we finished with financial institution broad overview and the RBI. Banking, little bit important. Several current issues are there. So we will deal with it a little bit in detail. Okay, again, not too technical, but from general studies point of view, what all you are expected to know, we will discuss. So Indian banking system. This you have already understood now. So Indian banks can be classified into scheduled and non-scheduled bank. Scheduled banks may you have commercial bank and cooperative bank. Commercial banks may you have public banks, private banks, foreign banks, and differentiated banks, RRBs, payment and small finance banks. So this is the structure. We have already understood this. A little bit about history of Indian banking system, because from your mains point of view also, when you are asked questions, etc., these and all are evergreen topics. Okay, so what is the history of Indian banking system? Okay, so some basic facts, all GK, just to very quickly we will cover them, some general knowledge questions. So Bank of Hindustan, okay, Hindustan, established in 1770, is the first bank, a formal bank. That it doesn't mean that there was no financial system before, but a formal financial banking system started with the Bank of Hindustan. Okay, then the first bank to be established by Indians was Awadh Commercial Bank, which was set up in 1881. The second bank to be set up by an Indian was your Punjab National Bank. Then the first bank to be established by East India Company was the Presidency Bank of Bengal in 1806. It also set up Presidency Bank of Bombay, Presidency Bank of Madras. All of them were merged together to form the Imperial Bank of India. Okay, it was renamed and restructured as State Bank of India. Okay, generally this is what it is. Except for State Bank of India, there was no public sector banks in India after independence. Okay, this was only state-owned bank. This was a problem. So after we got independence, okay, government started to play a very active role in all economic aspects, not only economic, polity, everything. Alva. So after independence, the central government started to play an active role in all sectors, whether it is infrastructure, industries, banking, financial sectors, everything. Government started to play an active role. Private were not involved, or private were not, were considered still, what you say, nascent, and they thought that private would involving private too much would lead to inequality in the society, because private will take up all the resources, because large section of people were still uneducated, large section of people were still poor, and we had the hangover of colonialism, and we had a very bad experience through colonialism and their private enterprise. And many private enterprise in India were thought to be hand in glove with the British. They favored the British. So they were not trusted as such. You have all read your NCRT, in that it is says so, right? So at the time of independence, the government started to play an active role in all economic sectors, including the banking sector. So it nationalized RBI. It enacted the Banking Regulation Act. Is that okay? So it did that to control the banks. What all? RBI Act and Banking Regulation Act. So after independence, government started to play an active role in economy. RBI was nationalized in 1949. Banking Regulation Act also was enacted in 1949. For what purpose? To control the banks. Except for State Bank of India, all others were still with private control. So we wanted to control them. It was not possible. Meaning, we could not use the banking sector to promote socio-economic development of our country. What was the purpose after independence? Socio-economic development. Britishers left us in a very bad situation. We had to come out of it, develop ourselves. Socio-economically, we had to develop. We had to bring about land reforms. We had to bring about industrial development. We had to develop our infrastructure. Everything we had to do it. So central government had to play an active role in doing so. Agreed? Yes. So banks were also supposed to facilitate that. Alva, banking plays a very important role. Where will capital creation come? Where will savings be deposited? It's all in the banks. So banks should play an active role. But private banks were not playing that role. Private players means they're all concentrated on the profits. They were all concentrated in urban areas, well-developed states, catering only to the class. The public still relied on traditional money lenders. They did not have any formal financial institution. With that, how can you expect development? So for that, the government undertook a massive exercise, a landmark historical exercise called as Nationalization of Banks. It took over the private banks. Just by one law, it took away all the public, private, not all, most of the big private sector banks. So I'm just talking about the history for you to get comfortable with where we are standing today. So this was this one. So 1949 Banking Regulation Act, all this is fine. So this is the first step. And then second was nationalization of banks. What happened next was nationalization of banks in the 60s and 70s. What do you mean by nationalization? Taking over private industries or private assets by the government. Private banks were taken over by the government. So why did it happen? What was the reason why we had to do it? The reason was private were not partnering with government to support the socio-economic development which we undertook in the through 5-year planning. They could not mobilize savings of the common man. They did not provide financial services to the masses. Most of them were concentrated in the urban and developed areas. Okay, they were catering to only rich, the industrialized. Okay, priorities, I mean, the agriculture and all were not being funded. See, some data over here you can find. When you write your mains exam, you'll have to substantiate your argument by giving these kind of data. Okay, for example, industries were getting 68% of the loans. How much agriculture was getting? 2%. Farmers were getting only 2% of the loan. How to buy tractors, how to buy seeds, how to buy fertilizers. When you don't get credit, you rely on money lenders. Money lenders will exploit you. High interest rates, constant exploitation by the money lenders. How can you bring about socio-economic reforms? So, an example to substantiate your argument. Even otherwise, one bank branch were catering to 64,000 population. One branch for every 64,000 people. Just imagine now how much is there. Lots. One branch means you might cater to 10,000 people. Back then, for every 64,000, there was one branch. How will people, common man, go and open a bank account? Very difficult to open a bank account. Banking was unheard of. And people had savings. And there was no way that the government could mobilize these savings. Okay, because they did not have avenue to deposit. They used to keep it under their bed or buy gold or whatever. That was the only kind of investments that they could do. When people's money cannot be utilized, it will become a dead source. I mean, dead. So it will not be used for economic development. Agreed, all of you are getting it. So that was the reason why we had to bring some change in banking system. In spite of RBI Act, in spite of Banking Regulation Act, it did not make much difference. So we undertook nationalization of bank by a law called as Banking Companies Acquisition and Transfer of Undertaking Act 1969. Initially, it was an ordinance, and then it was approved by the Parliament, and it became a law. In Polity, I mean, if you read a little bit, they went even to the courts asking how can you take away private this one. But under the DPSP, in order to promote socio-economic development and equitable distribution of resources, private properties can be taken. Anyway, that's a legality of it. We'll not go into that. So how many? 14 banks, private banks were nationalized in 1969 and 6 banks in the year 1980. So many banks were nationalized. Overall, 20 banks were nationalized. This is a list. Don't have to write down and all that. This is just a list for you to appreciate. Okay, if you look at this, Allahabad Bank, Bank of Baroda, Bank of India, Maharashtra Bank, Dena Bank, okay, Punjab National Bank, Punjab and Sindh Bank, Vijaya Bank, so many. Now, most of them have been closed down also, or rather merged. Alwa. Because the paradigm has changed. That's what we are trying to understand here. Back then, it was different. Okay, government had to play an active role. Today, what the government is saying, government should play minimal role. Yes, minimal government, maximum governance. Paradigm, look how things change. Avaga, it should be only government. Now, only Reliance. Correct? Okay, so that's the difference. Fine. Anyways, objectives. What was the reason? Quickly, that's what. Why? So one is convert the class banking to mass banking. Okay? So one by one, I think it's all self-explanatory. In your mains, if they ask what is the objective of national, it's all evergreen topics. Chuma, they can, want to ask something from the historical economy, they can ask. Okay? So convert the class banking to mass banking, make accessible to everybody. Make banking. So to promote financial inclusion. So many schemes after nationalization of banks, many schemes like lead area banking scheme, okay, like that, so many schemes were introduced. Many branches were opened in the rural areas, unbanked areas, okay, and it improved the banking activities, promote social welfare and thereby employment, making they introduced priority sector lending. Banks started lending to priority sectors and all this. Then controlling the private monopoly, the DPSP, to prevent the concentration of wealth in few hands. Expansion of banking into remote areas across India. Mobilize people's savings. So when they had more trust on government banks. So people started to deposit those monies, their money, hard-earned money in these banks. So government mobilized these resources, or the banks were able to mobilize and then invest it. So it led to development because of it. Then reducing regional imbalance, priority sector lending, sectors which were neglected by private, like agriculture, small-scale industries, housing, all these sectors also started to get finances. Developing banking habits among the people, creating confidence among them, diversifying banking activities, introduced more products for common man, small savings schemes, etc., insurance, pensions, etc., were introduced through banking system to create more financial activities. All these were mainly meant for promoting socio-economic development. Agreed, all of you? Yes. So these were the objectives of why nationalization of banks, in case a question is asked. So it was a very historical and an important, event in our history post-independence. Very successful. Okay, if you see some benefits that it happened. So initially, on an average, one branch served 65,000 people, as I told you, in the 1960s. By 1990s, one branch was serving 13,000. So clearly, it had become a mass banking. Okay. Similarly, if you see, branch expansion rose by 800%. Loans that were given increased by 11,000%. All this, obviously, through planning and industrial and agricultural development, led to a lot of improvements, reforms, socio-economic reforms in our country. So it was definitely a very, wonderful step that was taken by the government. Whatever today we might have a different ideology or a different requirement where we are saying that public sector banks do not perform, They are very, difficult, compared to private. Private are so efficient and all that. We might argue today. But back then, private and the people, the dynamics itself were different. Today, public is, or the customers are have more empowerment. Okay, if banks don't give, if you go to a private bank and some service goes wrong, you have different ways through which you can complain. You are more empowered. Back then, 80% of them were uneducated. Okay, so they feared the private. Imagine private would have had monopoly. Today, you can always argue otherwise. And this exercise in the 60s and 70s was very successful. But at the same time, as years progressed, there was some challenges that the banking sector started to face. Okay, so we'll see that. So some of the issues that the banking sector faced because of nationalization, one by one, we will see. So inadequate banking facilities. So what happened now? The banks were all owned by the government. No competition. When there is no competition, monopoly, it was monopolized by the government. No competition. When there is no competition, efficiency will reduce. Customer service will reduce. You might have gone to a public sector bank, right? You will have poor inefficiency in how they operate. Where one person can do the job, 5 people will be sitting. One person to give challan, one person to collect the challan, one person to give the token, one person to call the token, one person to give the money. Correct? No, so many people who one person can only do it. So massive staffing, over staffing, poor customer service. You might have seen, I don't know, like public sector banks, I don't know why they cover the door and don't want anybody to come into the bank. Correct? No, they keep the shutter and then you have to slide through. It always makes you feel like you are getting fat. Okay, so earlier I used to walk straight, now I have to go like this. Okay, so it makes me realize that I have to work out. Okay, I don't know why, it is always like that. Private sector bank is not like that. You go to HDFC, ICICI, they'll be like, come. There'll be 2 people standing out to bring you also in. Here they'll be hiding like, oh shit, he came, right? Public sector bank, poor service. Okay, so that is something like that, that feeling you get that you're not welcome. So back then it was even worse. Now it is better. Okay, if you see in 80s and 90s, if you ask your parents, they will tell you, knowing somebody in the bank was like you are knowing some IAS officer or somebody. Okay, they're like, please open an account. I know somebody in bank, come, I'll take you there. Nowadays, it's different. Nowadays, they'll come to your house, cook your breakfast and open an account and go back. Okay, so that kind of service is being provided, right? So anyway, so limited resource mobilized. Okay, people were not, we expected people to deposit their money and all that, but we were not able to do that. Indiscriminate and uneconomical expansion. Okay, massive overstaffing, as I told you, where one person needs to be hired. Because what happened was there was no private jobs that were being created, 60s, 70s, 80s. When unemployment were there, government created jobs through public sectors. Banking and all. Banking and all was one of the major source of employment. Anybody you ask, what do you want to become? I want to get into banking. Okay, because you only had civil services, you had the public sector enterprise for engineers and all that, HMT and BHEL, and for commerce students, banking. No more, no other jobs. So if government wanted to create jobs when there was protest, unemployment, it used to create bank jobs, where it was not even necessary because government themselves owned it. So all that is loss only, no? Then very high CRR and SLR, very high reserve requirements. It was almost up to 30%, 38% or something, both put together. Almost 40% was reserve. It has now been reduced, right? Then no mechanism to recover bad debts. They had to go to the courts, and court mein tarik, nothing will happen. Okay, whereas in today's time, there are laws that has empowered the banks. Sarfazi Act is there, Insolvency and Bankruptcy Code is there, Debt Recovery Tribunal is there. All that we'll discuss in the next class. So all these are there to protect the banks. Back then, if somebody defaulted, like Vijay Mallya defaults, nobody cares. Now he's run away. No. So because of the laws that are existing today, back then it was not like that. Then pathetic customer service because of monopoly, lower efficiency. Therefore, many of these banks were not making, they were making very less profit, or some of them even were making losses. When it is loss means it is a burden on government. Alwa. Then increased expenditures because many of these banks were spending on unnecessary things. Staff ka car, okay, housing, that, this, because again it became appeasement for the government. Okay, political and administrative interference, appointment of the banking officers, highest level, everything was done by whom? Appointments of banking top levels were done by the government. Recruitment scams were happening. Okay, so all these problems were there. And then high non-performing assets, loans that were given, they were not able to recover them, leading to burden on the banks. Okay, so all these problems were faced in the 90s. By 90s, many banks were suffering, public sector banks, banking system were in very difficult situation. Okay, it was in a very crucial juncture that we had to take the next step. So what is the next step in the 90s? As part of liberalization, privatization and globalization, we are also LPG'd the banking sector. All sectors including banking. So in banking also we liberalized the laws. We privatized, allowing new private players. We started to give license to the private players. Okay. And we also allowed foreign investors to come and invest in banking sector. Okay. So now 74% of FDI is allowed in banking. The idea was to reduce, to bring in competition, to improve the efficiency. Banks had to play a very crucial role. Today with liberalized and globalized economy, we cannot have, we need to have competition, right? Market force and other. And India was ready. People were ready for accepting privatization and globalization and liberalization. Okay, so the next phase. So you all understood? So that is the first stage or whatever you can call it, nationalization of banks. So what happened next was LPG reforms in 1990. So as a part of this LPG reforms, the banking sector also was liberalized and privatized and globalized. Okay, we liberalized and gave license to small number of private banks. Yes, you remember the new private banks classification, old private bank and new private bank. So the new ICICI Bank, Axis Bank, HDFC, like these small private banks also were given license to infuse competition. This move, along with rapid economic growth after liberalization and allowing global investors, FDI, to come into India, India saw sudden economic growth, rapid economic growth. So rapid economic growth means people had started to make money. People will now deposit money, take loans, economic activities, investments, deposits, loans, all that started. And who will make a profit? Banking sectors also started to make profit. So the benefit of this economic growth reached the banks. So it was a huge, explosion of banking system in India. Private players started to open branch after branch and started to hire people and bring about, a lot of reforms, computerization and so many other kinds of reforms, which we had not at all seen during the nationalization phase. Suddenly banking actually, people started to get more of the banking system. Okay, so revitalize the banking sector of India. Till then, almost all the banks were under a lot of stress. Okay. Along with that, relaxation of foreign investments. So benefit was what? Better customer service, spread, okay, of banking across India, and efficiency improved and all that. Retail boom also. People started to borrow money, spend money, and they started to invest money. So all this led to a lot of retail boom in India, and also support for various sectors like export sector, service sector. All this benefited a lot because of banking sector boom. Okay, so that is what happened in 90s. So before this, there are two committees which were set up. Okay, two committees or rather one after the other. Okay, so Narasimhan committee to recommend. So that is important. So before 1990s, now if I put this over here, yeah. So nationalization of banks, the history of banking, if I tell you, the nationalization of banks, banking sector reforms. In that, there are two committees. So this is one committee on financial system, Narasimhan committee, and the second one is what? Banking sector reform. Same, Narasimhan committee 2. Okay, so these were set up to advise the government as to how LPG reforms will be introduced in the banking sector. Okay, the recommendation of these committees we will discuss. Okay, I hope all of you are with me. Is that all fine? So that is the second phase, if I have to call it second phase. Okay, liberalization and all that happened in the 90s. Before that, committee's recommendation we will discuss. And present is the third phase, if I call it, mergers and disinvestments. Okay, because again the banks have started to make losses. Alva, losses, I mean profits, losses, profit, losses, so like that, up and down. So 90s it started making profit. Now again they started to make loss after economic recession. No, many banks 90s made full economic boom. So they started giving loan to lot of sectors. 2008, poof, economic recession, and many companies made loss. When they made loss, the loans that they took disappeared, and many of the banks had to absorb those losses. So two committees, Narasimhan committee, okay, 1 and Narasimhan committee 2. Very quickly we will see the recommendation. At least you should know what they have done. Okay, these are all evergreen topics. Okay, if not in detail, but at least what they recommended. See, banking sector reform, first Narasimhan committee report, 1991, financial sector reform. The second one was Narasimhan committee report 2, 1998, banking sector committee. Meaning what? The first committee dealt with financial sector as a whole. The second committee dealt with banking specifically. Okay, but both were headed by Narasimhan committee only. So we'll discuss what is specific with banking sector itself. Okay. So the first report, Narasimhan committee report 1 on financial sector. See, one by one we will discuss. That which is in red or something like that, we will, some may have to be dealt in detail, which I will do it in course of our further discussions. Okay, so first one is establishing a 4-tier hierarchy for banking system. Meaning what? Just to understand it in simple terms, 4-tier hierarchy means certain banks should be operating at international level. International level. Then there should be some bank at the national level, which should be catering to the national requirement. Some at the regional level, and the last one at the local level. So you should have a 4-tier banks catering to specific needs. There would be some banks which should operate only at the local level, like your cooperative banks which operates at the local level. So such banks. Then there should be some which operates at the regional level, catering to the regional requirement at the state level and all that, like your regional rural bank. Then there should be national banks which should be addressing the national requirements of the like payments and other things and all that. So like your regular banks. Okay, and then there should be some 3 or 4 very big banks of India which should be operating at the international level and competing with international banks. Because if India has to be a global economic leader, it has to also have backing. It should have its own troop. Okay, banking sector is one such example. Otherwise, what will happen if Indian companies wants to invest abroad, or a foreign company wants to invest in India? They go and borrow from some other bank in Singapore, in Switzerland, okay, in US. They borrow money from that bank and come and invest in India. and the royalty or profit or whatever interest has to be paid to those banks. Instead, if you have your own bank sponsoring investments in India by a foreign player, like they want to come to India, they borrow money from India and invest here only, all the money will remain in India. So you need a foreign player like State Bank of India, ICICI Bank can play that role. That was a reason why State Bank of India and its associate banks, 5 associate banks, were merged to create the largest Bank of India, so that it can play a international, so it can have branches outside India and mobilize resources for India's global economic needs. Agreed? Same way, national needs, national highway, etc., all that, whatever. See, if say for example, we want to build an infrastructure which is worth 1 lakh crore, not that whatever Bangalore Chennai highway or something, 1 lakh crore. Where will which bank has 1 lakh crore in India? Where will they go and borrow that money? Somewhere else. So that should not happen. Then the interest will go there, no? So that's the idea. Okay. Next, a phase and local and regional, catering to small requirements. Our farmers, small industry, whatever is the local requirement. So they will be able to have that local flavor and interact with the common man of that region. Then phased reduction of SLR and CRR, so as to give more room for banks to operate. Then phased achievement of 8% capital adequacy ratio. This I will explain, okay, in our subsequent classes. Capital adequacy ratio, like how RBI should maintain a capital reserve, capital reserve to handle the risk. Same way, even a banks, other than reserve requirements, they also have to maintain a capital adequacy ratio or a capital base to meet those situations. You understood? Then, no further branch expansion, no further nationalization. Give license and promote competition. Allow private players to come in, bring in more competition. Then, allow public sector banks to issue shares so that the government's shares will get diluted. You will have external accountability, right? So it will bring in more, changes, internal changes within the operation of the banks. Because when you are accountable to a shareholder, you will have to bring about internal reforms. Then specialized debt recovery tribunal, because debt recovery was always delayed because banks had to go to the courts to recover the loans. So create a specialized courts called as tribunals, quasi-judicial bodies, so as to fast track the debt recovery, okay, in a time-bound manner and reduce the burden on the regular judiciary. All right. Then classification of assets based on profile. Okay, credit rating of the customers. Okay, those who have a better credit rating will get loans at a lower interest. Then deregulation of interest rates, so that monetary policy will become more effective and banks will be motivated to bring efficiency to reduce their interest rates and attract more customers, so as to bring in more competition. If interest rates, see, earlier interest rates were fixed by RBI. Now it is deregulated, meaning banks will fix it based on their operation. If banks are operating better, like HDFC Bank, you go and take housing loan, out of all the banks, HDFC has the cheapest. Why? Because their operation is more cost effective, so therefore they are able to keep the interest rate low and attract more customers. Let other banks also become efficient and reduce the interest rates. That's the idea. Then supervisory function over the banks should be shifted to some other body. Look at this. RBI does it. Okay, they recommended that have a specialized body to regulate the banks. This has not been implemented, so that's not there. That was a recommendation, but it has not been implemented. So banking regulation is still with whom? RBI. Okay, and setting up of asset reconstruction fund. So these are specialized companies who will purchase bad loans from banks. You understood? So the loans, Vijay Mallya's loan, he's not going to repay it back. So those banks who have Vijay Mallya's loan can now sell it to a company called as asset management companies, funds. And those companies, now you might ask why they buy it. They'll use it and recover the money. They are experts in recovery. They might have gundas to send to house and recover the loan, whatever. So there are mechanisms. We will discuss that in the next class. Okay. So create asset management fund to unlock the assets which are not performing by the banks. Non-performing asset. Vijay Mallya's loan, 100 crore is with State Bank of India. It's not performing. They can sell it at 80 crore and get at least 80 crore instead of 100 crores. Atara. Okay. So this is the first committee recommendation. Okay. Next committee recommendation. Matlab, this committee was set up to review the previous recommendation and to what extent it has been implemented and give additional advice. So it recommended that strengthening the banks in India, merge strong banks with another strong bank to have a multiplier effect. Strong bank with strong bank to become a very big bank, to become competitive. That's what the government is justifying now also. Yeah, merger of banks so that it becomes a big bank. Then narrow banking. So this you can remember. Narrow banking can be asked, just one sentence. So sometimes what will happen is when the banks are not performing well, RBI can direct them that you don't give loan because you are not very effective in recovering these loans. Instead, you invest in a safe investment like a bond. See, banks are there. Banks will take deposit from people. What do they do with this money to recover it or to make profit out of it? They give it as loans. So banks which are performing poorly, if they give loan, it is risky. That is the assumption because they're not able to recover the loan. So such banks should be investing that money only in safe assets like a bond. Therefore, it will reduce the risk. So such banks are called as narrow banks. So weak banks will be allowed to place their funds only in short-term and risk-free assets. Then raise the prescribed capital adequacy ratio. Same thing. I will explain it to you in the next class. Then greater freedom for banks. Opening of branches, closing of branches, everything will be allowed by the banks to decide on their own. Otherwise, they had to take permission from the RBI to open a branch, to close a branch also. So now they'll open and close as per your wish. If you want to open, you can open. You want to close, you can close. Except for little bit guidelines are there. Okay, but otherwise it has complete freedom. Did you understand? Next, review banking laws to make it more effective. Okay, like in recently banking law has been amended to give more power to RBI to control the banks, cooperative banks like that. Then faster technological upgradation, computerization, skill development of the staff, better human resource management, depoliticization of the banks by reducing the control of the government over the banks, professionalization of the banking, reviewing banking recruitment. So IBPS has been created for recruitment of banks to reduce corruption and all of that. Is that understood? So these are the recommendation of the second Narasimhan committee. So in the next class onwards, there are a lot of terms that we would have seen here. There are a lot of concepts relating to banking like non-performing assets, asset management company, interest rate deregulation. All those things, small things are there. One by one, we will try to cover them all. Is that okay? So this is very briefly about the banking system. To conclude our banking system, we will finish off with bank mergers.